On the topic of the markets, Becky and I were talking on the broadcast yesterday about an article in the Wall Street Journal that was looking at the beginning of presidential terms and the PE ratio. And we are at historic highs. And I wonder whether that factors into your thinking about being cautiously pessimistic about where the market goes in this environment. Are we priced for perfection?
Yeah. I think asset prices are kind of inflated. And, by any measure, they're top 10 or 15%. I'm talking about the U.S. stock market, but it's not true for stock markets around the world. And they say sovereign debt's priced pretty well. Credit spreads are all-time highs. So, yeah, they're elevated.
They're elevated.
And you need fairly good outcomes to justify those prices. And we're all hoping for that. And I think, having pro-growth strategies helps make that happen. But there are negatives out there, and they can tend to surprise you.
Hey, Becky, I think Becky's got a question for you back home.
Yeah, Jamie, first of all, hi. Great to see you. Second of all, the stronger dollar. How do you weigh into that? And I'm just thinking because we just finished talking to Joe Wolk from Johnson & Johnson. Procter & Gamble is going to be reporting this morning. It was a really rapid rise for the dollar, and that's going to mean some things for some of these international companies, especially if you consider the potential for tariffs and retribution tariffs on the other side. How do you kind of play that out? And is that one of the things you guys are gaming out in the war room?
Yeah, I don't think it's as important as people think. The stronger dollar is an outcome of all these other things. And so, all things being equal, an American president, an American secretary of Treasury can say we want a stronger dollar, because what that means is that your economy is strengthening versus others generally. So, it'll bounce around, and of course, tariffs can change the dollar, but the most important thing is growth. Good economic growth is good for the United States, probably will strengthen the dollar. And so, we should be wishing for that. And yes, it'll have some negative effects on some companies, but most people will be voting for the better growth around the world.
I'm curious.
And I should point out, the world needs more growth. So even being here with Europe, you talk to European nations and how their GDP stagnated for the better part of 15 years. Growth is the only real solution to reduce these deficits, to reduce, debt, and to make the investments necessary to grow. A lot of the investments, by the way, don't think it's government investment. Think it's also private capital. Private capital dwarfs government investment. And so I think you have to be very careful about thinking the government can fix all these things.
Do you think other nations, let's say Europe and around, do you think that they are recognizing that and thinking that they need to change their ways to be more like the United States, to go after bureaucracy, to maybe change tax codes, to try and lure private capital?
Totally. I mean, I heard a little bit of a speech from the President von der Leyen yesterday. I met today with some, Chancellor Reeves of the UK. I don't think there's anyone who doesn't understand that they need more growth and that certain things that people have done have inhibited growth. Inhibited its regulations, its permitting, its rules, its, I put in general anti-business sentiment is having kids having skills getting out. I think everyone realizes that, but the real trick here is execution. You can talk about it all you want. The Draghi report, I mean, that's great, but they have to execute the Draghi report. And so a lot of people are talking about the Draghi report, and I think in the United States, it's the same thing. People are realizing how damaging these things have been.